Morning, guys. Today is Tuesday, July 2nd, 2013. Todd is still out of the office. He'll be back on Friday. We're looking at OXY. What we'll do is just quickly go over those trades from last week and yesterday that we talked about, and then I want to move on to another subject. I want to introduce you guys to something to identify some moving averages to identify as logical support and resistance in a trend that you can add to your trading using some of them actually work quite well with the counter channel bands, with Todd's counter channel bands. So before I get into that, let's quickly go over these. On Occidental Petroleum here, if you had not gotten out of the market right in here, it depends on, if you're looking for that 91.60 level, where the market's back approaching it. We may get that fill today. We're trading right around 91.30 right now. So we're just shy of it for that first profit target. And then that second profit target, what I suggested was you got potential profit tripper right in here. So you might want to just front run that a little bit. Okay, maybe around 92.70, 92.75 or so. But we're just about, maybe later today we'll tag that. The ES is starting to break out, so maybe later today we'll tag that that 50% if you did not get filled the other day. Okay, tight stop, half a range below the lows here. So, all right, right in this area. All right, so let's look at Intel real quick. Let me find Intel here. And Intel's just taking a while to get going. Get in the trade. Got in the trade right in this area, and we're just kind of back. You started to catch a bid, and then the market's now pulling back. So it's just taking a while to get going. You got a relatively tight stop on this. Half a range, is around 26 cents. So you're right around 23.15 on the stop. So tight stop, low risk here. First target right around this 24.70, 24.60 level in this area. Second target up in here. Okay, this one's just taking a while to get going. So when you're trading off the day chart, sometimes you might be in a trade for a little while. So, all right, let's look at the other short trades that we pointed out the other day. AT&T market started to follow through. Got a little bit of follow through today. Now we've got a bullish outside vertical bar. Okay. That's opposite of really what we're looking for in the trade here. So if you're short in here, anywhere in this area, you've got a bullish outside vertical bar. See how we've got the low and high have now taken out the entire day's range from yesterday? Okay, it didn't quite pull back to that first target. All right, so what I would be looking to do is potentially stagger stops in here. Okay, and just move your stops up. You got a half a range. Your average range is about 65 cents. So we split that in half. Let's go 66. So 33 cents. What I would look to do is go 33 cents above this upper counter channel band on a portion of the trade. Okay, so 36.55 for the stop on a portion of the trade, maybe half the trade. And now that you got a bullish outside here, go see where today's high is. Okay. What you can do is go 33 cents above this pivot high, and then see where today's bar closes and see where the high is, and then bring your stop down 33 cents above the high of today. Okay. Wait for today to close. Right now you can bring it down around 36.33, so you can have your stop staggered half the position at 36.55, 36.33, and then if this maintains, if that high holds today, then what I would look for is to bring your stop down to 36.13, 36.15, something like that. Okay, just above the high, half a range above the high of the bullish outside. Okay, you just want to manage this trade. We're not following through like it should, so just got to manage it. All right, Dominion Resources. You got a bearish outside vertical bar yesterday, okay? So that allows you to move your stop down. Okay, now we've got even lower risk on these trades here. So this is good. This is what you want to see when you get into a short trade, within a day or two, a bearish outside vertical bar is a good sign. So the high of the bearish outside is right around 57.36 or so. Your average true range is a $1.05, 105. So you go about 52 cents, 53 cents above the high of the bearish outside vertical bar. Okay, so right around 57.90 maybe with your stop, 57.90. Okay, just right around here, 57.90 with your stop. Okay, relatively tight stop on that, depending on where you got in here. And then obviously your first target right around here, and then second target down in here. And then third target, I would look, you could draw the 1.272% fibs and look for somewhere around in this area for that third target. And then if you're trading more, you've still got more position on, use that upper counter channel band as a stop, as a trailing stop. So, and then Walmart, we hit the first profit objective on Walmart. Pretty much was it yesterday? Everything's all blurred now. Everything's all running together. I thought it was the same day. Yeah, it was the same day. And we got a little bit more follow through to the downside. And then now today, Walmart's pretty much catching a bid. We'll see where the volume is. You got some selling pressure, or you got the volume kind of on the increase on this move down. We'll see where the volume is. We'll see how the volume is at the end of the day. If you got light volume, in here on this move up, it could be just pulling back again and just continuing to test these levels. If you get a volume spike on this this move up here at the close of today, then that would more or less be a bullish sign. So, but that first target's been hit. In any case, guys, you should have your stop tightened up now. Okay, half a range on a Walmart. ATR is 116. So what are you looking at here? 55, 58, let's say 60 cents. 60 cents above the pivot high here for your stop. Okay, so you've got the pivot high at 76.11. So I'd be looking at 76.70 for the stop on this trade. 76.70 for the stop on the remaining portion of the trade. Okay. The last thing you want to do, and I don't do this because, if you're going to do it, you maybe do it on a portion of the trade. I like to keep the stop out of the way. If you get too close too soon and you get that first target hit, then you move your stop to break even on the remaining portion of the trade, the market comes back, tags your entry, and then follows through. You get stopped out, and then it follows through. So if you want to do that, keep a half of the portion that's left back in here, and then move the other half to break even. Then you're still in with a portion of the trade, and just in case the market does sell off, within the next day or two and hit that second target, which should be somewhere around in this area. 50%, 25% of the way from this low in here up to the pivot high. Okay. All right, guys, make sense? So. And let me offer a couple other ideas to identify logical support and resistance in uptrends and downtrends. There's a couple other moving averages that I like to use in here. The 8 EMA and the 21 EMA, as you can see in here, if you want to just use those, you see in here, especially the 21 EMA. You got the mid-Keltner and the 21 EMA. Makes a great support level. If you look at this in here. And this can really come in handy if you like to scale into your trades. Because you don't know you never really truly know how far the market's going to pull back. It could pull back 25, 38, 50, 62%. You don't know. So if you find that mid to lower, or you're missing some of these pullbacks using Fibonacci levels like the 38, 50, and you're just missing some of these entries, I like to use the 8 EMA and the 21. An entry off the 8 EMA would be more like an aggressive entry, so you need to be careful. You don't want to be entering that, if it's a mature trend. All right. The 21 EMA is a really great place to look to trade off of. As you can see right in here, look how the market pulls right back between the mid counter and the 21 in these uptrends. And now again, as the market gets extended, it becomes mature. You want to look for those deeper pullbacks, but you can see in here how these pullbacks. I mean, you can see in here how they work. So there's just an idea. A couple other moving averages real quick for deeper pullbacks. Guys, what I like to use, format analysis techniques, is the 34 and then obviously the 50. That would be like the last logical level, other than the 79.89. That would be your last logical level of support. Now, I don't have all these. I just have 2 of them on there, and it might be a little bit easier, if you don't need the counters, if you use them and you don't need them to just turn those off. Or I know some of you like to use them as kind of an envelope of price action. And they were great to identify that boundary of price action, net, normal ebb and flow. But the 34 and the 50 moving averages are also pretty popular. I mean, almost like self-fulfilling. So the 8, 13, 21, 34, and then 50. And I know Todd uses the 79 and 89. But as the last logical level of support or resistance. The 50 and the 34 make a great pair to, like Todd uses 79, 89, the 34 and 50 make a great pair. If you want to define that trend a little bit quicker, the 34 and 50 make a great, you can use that just like Todd uses 79, 89. So, and then you can use these areas to identify support or resistance in the trend. Just remember, if the trend is mature, you want to look for the deeper pullbacks, okay, the 21, 34, 50. You don't want to be entering off the 8 and 13 unless it's a new trend. So as the trend matures, you want to start pulling back, and if you're going to buy retracements, you don't want to get too aggressive in a mature trend, okay? Hope that helps, guys, and we'll see you tomorrow